XRP's legal battle with the U.S. Securities and Exchange Commission is officially over, and this has dramatically changed the conversation in the ETF space. Canary Capital CEO Stephen McClurg believes an XRP exchange-traded fund could not only arrive this year, but could actually outperform Ethereum ETFs. In a recent discussion with Paul Barron, McClurg highlighted three main reasons for his bullish stance, and they go far beyond simple market hype. First, the settlement with the SEC has removed one of the biggest uncertainties around XRP. According to prediction platform Polymarket, the odds of an XRP ETF approval in 2025 have now jumped to over 88%, compared to just 53% a week earlier. That's a massive shift in sentiment in just days. McClurg, whose company has already filed for an XRP ETF, stated, "I absolutely believe there will be an XRP ETF this year," while acknowledging that nothing in markets is guaranteed. He also pointed to a new generic listing standard recently published by NASDAQ, the NYSE, and the CBOE. This standard says that tokens with a regulated U.S. futures market for more than 6 months could qualify for ETF listing. XRP already has futures markets on both CME and Coinbase, launched earlier this year, and will meet that time requirement within months. This could put it in prime position for approval. Once these standards are fully implemented, McClurg expects 5 to 7 crypto ETFs could launch, including products for XRP, Litecoin, and HBAR. But, he stresses, XRP has a unique edge. There's going to be very strong demand for XRP. It's the leader in more traditional financial services rails, and coming from that industry, I understand that advantage very well. So why exactly does he think an XRP ETF could outperform Ethereum ETFs? McClurg gives 3 main reasons. First, there's no staking opportunity cost. Ethereum holders can earn a 2 to 3% yield by staking, which can make holding an ETF less appealing to crypto-native investors. With XRP, there is no staking yield to miss out on, so ETF investors aren't losing any potential income. Second, XRP is a category leader. Ethereum competes with multiple other smart contract platforms. XRP, on the other hand, is firmly positioned as a leader in cross-border payments and settlement technology, a niche with fewer serious competitors. Third, community and demand. McClurg estimates that an XRP ETF could attract around $5 billion in inflows in its first month, possibly surpassing the initial performance of Ethereum ETFs. The conversation also touched on the potential future of staking inside ETFs. McClurg revealed that industry players are actively talking with the SEC about allowing staking within ETF structures. "We're all talking to the SEC to get staking allowed in ETFs," he said. "This means that even if XRP one day introduces staking capabilities, ETF providers could adapt to include it." Ethereum ETFs, according to McClurg, were disadvantaged early on by the inability to offer staking yields. If regulations change, that could help ETH ETFs, but XRP's advantage in financial infrastructure might still keep it ahead. From a critical standpoint, McClurg's view is optimistic but not without challenges. Regulatory processes can be unpredictable, and while XRP has unique strengths, market adoption for any new ETF depends on broader sentiment and institutional readiness. However, his arguments about category leadership, lack of staking yield friction, and concentrated demand offer a clear framework for why some believe XRP could outperform. If McClurg's prediction comes true, we could see the launch of one of the most in-demand crypto ETFs in history, potentially shifting market share away from Ethereum-based products. The real test will be whether institutional investors view XRP as a long-term strategic asset or simply a short-term speculative play. Either way, with the SEC lawsuit in the rearview mirror and futures markets already active, XRP's path to ETF approval has never been clearer. And if the numbers McClurg suggests are accurate, Ethereum may soon have serious competition in the ETF arena.